All right, we're live. This is episode 65 of the Deconstruction podcast brought to you by Jobtable, the simplest way to grow and manage your construction business. As always, we're going to kick it off with a review. This is coming from Souk Beer Carpentry Company in Toronto. Have been using Jobtable for 2 months now, really enjoying the software. Software is very easy to use and user-friendly. It's really been helping us to track our materials and labors on our millwork projects. Short and sweet. Thank you, Souk Beer, for that review.
Thank you very much.
Yeah. And now we're going to be definitely talking about a lot of AI in this episode. And I just quickly wanted to share one of our products with Jobtable. It's Jobtable Sites. These are AI-powered SEO websites, updated and maintained 100% through AI. These websites automatically update themselves based on real-time search trends, meant to bring service and trades companies to the top of Google for your preferred markets and services. So think of a marketing agency that you would typically pay $1,000 to $2,000 a month for website maintenance and SEO work, but one that works for you 24/7. It's always up to date and accurate, delivers results, and is a fraction of the price that you would traditionally pay. So, and we're already seeing a lot of our clients getting amazing results with organic leads flowing and their pipeline being added to every day. So if you are in the market for a website, do check out Jobtable Sites. You can sign up for a trial on jobtable.com. All right. With that, we have a special guest today, someone I've known for a while, and I feel like having him on has been a long time coming. He's the host of Canada's #1 real estate investing podcast. He's a licensed broker and the chief real estate officer at Valerie, which is Canada's first AI real estate brokerage. He's been quoted all over the place, like Bloomberg, Wall Street Journal, Globe and Mail, many others. And he's one of the few people in this country, I would say, who can actually explain what's happening to the housing market without either talking you into buying something or scaring you into selling everything. So you might be thinking, what does a real estate guy have to do with construction and trades? Well, the reality is everything. The condo market has collapsed. Starts are down 90% in 3 years. Developers are canceling projects. The work that used to show up in the pipeline isn't there anymore, and nobody can explain why or when it comes back better than this guy. And he's also a big Justin Bieber fan. Shout out to Jimmy B. The last 2 albums were fire. Daniel, welcome to the podcast.
Yeah, thanks for having me, man, and thanks for giving Biebs a shout out. I've been trying to get him on the podcast, so we'll take anything we can get.
I see that.
Daniel, thank you for coming, man. Nice to meet you.
Yeah,
great to meet you. That was unexpected there.
What's your favorite song on the album?
Bro, I think Speed Demon probably.
I was gonna say
or
that,
Go
yeah.
Baby. Yeah,
Classic.
Yeah.
All right, Daniel, if you don't mind, take a minute for those who might not know you. Just quickly introduce yourself and what you're up to.
Daniel Foch, real estate broker by trade. Been in the business like my entire adult life. Started by building what I would call maybe like the first digital agency for realtors. Are obviously a very popular entrepreneur business now, but back in the day it was like just Twitter, YouTube, and Facebook pages that I was starting for realtors. And I would build them kind of like a little bit of a web platform to share their listings on social media. Sold that business to an IDX company out of the U.S. and didn't go so well on the acquisition. So I learned a little bit there. First exit was a big flop. After that, I accidentally built a data science platform for realtors just by like making charts for myself, and that really got me more immersed in like the analytical world. I was a young agent and needed to like build brand credibility, and I felt like what better way to do that than stuff that people can't argue with, like real hard data. And so I built a platform that allowed me to like manipulate real estate board data into charts. The real estate boards didn't like that; they shut it down. And then like 2-year back and forth between lawyers, they actually ended up just like purchasing the platform. So it's now the most used data science platform by realtors in the world, actually, which is nice. I think like 150,000 users. Yeah, now I from there kind of like caught the interest of a couple of guys who were running this AI powered real estate brokerage called Valerie.ca, and started working with them on like training their model on real estate intelligence. And we've been really on the forefront of what AI has been doing in that process, and obviously have heavily involved in agentic AI and sort of AI with hands that can kind of like click through your computer and do stuff for you and actually like execute tasks. And so really been trying to lead the charge on implementing and agentic AI in realtors' businesses, and automating away a lot of the workflows that they would otherwise delegate to a virtual assistant or a human, like a local assistant, which has been, really protecting the bottom line of agents at a dire time, as you were mentioning, the worst market that we've seen in our lifetimes.
Yeah.
Yeah.
All right. Yeah. No, there's quite a few topics I want to discuss with you, get your insights. Let's start with the condo collapse.
Mm-hmm.
So like I said, 90% drop in condo starts. I believe that's the number over the last few years. Probably the most direct hit to trade companies in a very long time. So what's going on there? Like, who's building? Who stopped? What are you seeing?
Why did it start as well?
Yeah, sure. So we can go like hit the rewind button a little bit. It started in like 2017-ish, when basically a lot of like foreign cap. So in Vancouver, they put in a non-resident or like a foreign buyer ban or tax, and a lot of that capital migrated over to Toronto in 2017, and then Toronto Ontario ended up putting in a non-resident speculation tax thereafter, and you started seeing people actually foreign capital start pushing into those projects to try and basically get exposure to the market without having to take possession of real estate and pay that tax immediately, maybe defer it to when they did take possession, or monetize the asset, speculate on real estate in a different way so they could flip a assignment contract or whatever. So you really started seeing a ramping up of speculator activity, I would call it, in real estate during that period of time. And then COVID happened, so you stack on top of that, the lowest interest rates we've ever seen, and that got a lot of your like domestic consumers really amped up. Plus, you had this sort of coming of age moment for millennials, where a lot of them were buying their homes for the first time, and then you also had like the whole office thing, or like kind of urban area shutdown happening, and people were migrating to different markets all over the country and all over their province, and that just drove an insane amount of residential construction. Builders were obviously eager to capitalize on the price growth and the people moving around, and so you saw a lot of single family detached subdivisions getting created, but still a very small part of our total supply that we're creating here. And then we've seen a ton of high rise projects and apartment projects getting contemplated. 2022, you saw interest rates basically, go up 3x, and that took all of the wind out of the sales of that market. And at the same time, the government started insuring builder mortgages or builder and permanent mortgages for purpose-built rental developers. And so you actually started seeing like all of the condo supply or all of the apartment supply shift from condo to purpose-built rental projects. And the challenge for that was like the model doesn't work exceptionally well in expensive markets like Toronto and Vancouver. So you're seeing a lot of rental supply. Like, we're actually building record rental supply as a portion of total construction activity in Canada right now. But it's happening in Alberta and Halifax and the prairies and the East Coast, because the economics of projects work there. And the GTA Ontario has really seen everything kind of stop, right? Like, and this is why you've got you get the February jobs print, and Carney and Ford are quick to rush and remove taxes on housing to try and stimulate, make it cheaper for buyers to afford to buy, so that hopefully they'll purchase units, and then we can get some of the construction jobs moving again. It's interesting you mentioned like high rise versus low rise, because I actually think like the C-level trades, like your ground based guys, they were impacted earliest, because it was a very agile supply. Like, that kind of stopped. You were here. There was a period of time in like 2023. I remember somebody like did like a TikTok story, and they're like, "There's like 2 foundations being poured in like all of the GTA right now," right? high rise is like a little bit different because your slab trades are a different group. They're often unionized, larger companies, RFP, bigger bids, etc. And they're also still working because these are like 6-year projects or 4-year projects. So there are some slab guys who maybe their projects have terminated and they're looking for work and maybe having to move around the country to get more slab work or pivoting into a different type of jobs. But the ones who are still on projects are not in a hurry to finish because they know that there's not a super good pipeline thereafter, right? So I'll leave it there, and we can kind of spiral out of control from that.
Yeah, I just wanted to actually add to that and actually ask a question at the same time, because Charlie and myself, we run like a mid-rise commercial and industrial plumbing company. So you're right, like in 2023 or 2024, we started hearing of a lot of, let's just say, the big excavation companies and the demolition companies laying off massive amounts of their workforce, unionized or not, which was, for us, a kind of an indicator where it's like, well, if they're not digging or, no cranes are going up, it's an issue, right? So like you said, like these projects that are already given, they're on the go, but there's nothing. It seems like there's nothing coming up. But I wanted to touch base a little bit on that high-rise sector, because I heard something interesting, and I wanted to get your take on this, Daniel. Is I was told that a lot of this also was poor city planning, because a lot of these high-rise condos, a lot of them are 450 square feet, 120 square feet, and it's like, how many of these units can you really build? Because reality is these are either bachelor or like entry level.
Yeah.
And I heard a pretty interesting angle on this, and again, just want to get your take on it. There also is a blame to the city planning for approving this many, let's call it entry level condos, because how many can you really do, right? Like these are first time home buyers. This is the entry level into the market, and then from there they normally upgrade, right? But when you have an influx of these, let's be honest, shoe boxes, right? Like you walk in, you can literally, touch wall to wall with your hands like this. How many of those can you put up? And do you believe that has added to this kind of saturated and overdeveloped kind of sector here of that type of condo?
Yeah, it's a great question. I think that there's a whole stack of like perverse incentives that led to this, and city planning is certainly one of them. Like builders were incentivized to build the smallest units because they could command the highest per square foot value, but that's like a sort of, it's not just because they approved so many. Like, yeah, they could have limited or put a minimum size. And I know CMHC used to not insure units under, like, I think it was 425 square feet, and then they actually reduced that as units started to shrink. But I think the big part is like we had this like exclusionary zoning before, and like basically like Toronto. Let's use Toronto as an example, just because it's the easiest to explain, and most people know what's going on there. Is you had two types of zoning. You had single family residential, and then you had like super dense high rise, and there really wasn't much in between that. Like that's your missing middle, right? So you could get some mid-rise stuff or whatever, but you weren't getting like fourplexes or 4-story walk-ups or like small apartment buildings, 10plexes, whatever. We're starting to see that change now, and they've really like realized that there was going to be a huge problem as the high-rise model started to collapse, and we needed to backfill the supply in some way. And actually more than 50% of, I think it's almost 60% of new supply being created in Toronto today is coming from multiplex projects, so like 3 to 5 unit projects in the last like 2024 and 2025, because high rises are basically toast. So they're changing a little bit, but back then, yeah, absolutely. It was Greenbelt. It was our unwillingness to sprawl. Like, why does Alberta have so much more affordable housing than the province of Ontario? Well, I mean, they are not afraid to just continue sprawling, and your average consumer does want a single family detached house on transit within driving distance to the downtown core. We don't have options to create that type of housing in Ontario, at least not at a price point that your marginal buyer can afford. And so I think that's also what kind of compelled it. We're sort of like forcing people into density from an economic perspective. Like if you want to work in the core in Toronto, you don't really get the opportunity to live in, a $1.5 million McMansion in the GTA and the 905 because you can't afford it. The transit's not exceptional. We're not building more of it, et cetera. Like we're building so little single family detached and so much high rise in general. So I don't know if that necessarily answers your question, but there were lots of things that led to why units got so small for sure.
Daniel, out of curiosity, because we talk about this all the time, just the high-rise market just completely crashing. I don't know if you're able to give us some kind of number just to put it into perspective so people, listening to this can actually kind of get an idea. Out of all the condos sitting in the city, how many of these are actually empty and just can't be moved? Do we have any idea?
Yeah, like we do have I guess it depends on what you mean by empty. If we're talking about unsold inventory, you would be a 30 to 40,000 mark. And that's built. And the challenge with those is units that builders they've built them and they maybe they had to pre-sell 70% of their building, and you have 100 projects like this, and 1,000 or whatever 500 units per project, and the builders assumed, okay, I will hold back 20 or 30% of these. And sell them at the end when prices are higher, and now prices are lower, right? And so they're kind of faced with a couple of challenges. So challenge number one is I can't sell these at market value because I'll either lose money or I'll piss off all the other buyers in the building because they're going to lose a bunch of money as I devalue the units in the building. And then, so that's number one. Number two is I can't really rent it out, or I couldn't, and this is where the GST, HST thing kind of comes in. I couldn't rent it out because I would have had to pay HST, closing costs, et cetera, double land transfer tax in the city of Toronto, and it wasn't compelling economically for me to do that. Now with GST, HST gone on those units, builders can actually take possession at a functionally 10% discount from what they would have before, and they're more likely to actually just hold those units and rent them out and maybe try and sell them off over time. So that's kind of number two. And then the final one is you can't really leave it empty because, obviously it's burning a hole in your pocket because it costs money to hold these units. But two is after 2 years of a new inventory existing, the vacant homes tax would actually be applicable on those units. And so, again, you've got just a handful of perverse incentives that make it very difficult for business operators in the housing creation space to succeed in doing their job of creating housing.
So me and Johnny, so we have a lot of contractors that we work with, and exactly to your point, when they saw the condo market crashing, they were early days to pivot, and they went into mid-rise rentals, right? They started putting up buildings for rentals. So we've been very fortunate to have those relationships and continue to work in that market. Would you say that, to your knowledge, is that a healthy market? Are you seeing a lot of mid-rise, high-rise buildings going up that are now shifting to rentals instead?
It's varies deal by deal. A lot of the sites that builders bought when condo prices were really high and they were more ambitious about land prices, probably wouldn't work for you couldn't just convert that to a rental right now. The numbers probably wouldn't work. But if you buy a site today, now that land values are down 30 to 50%, you can probably make it work. I mean, you've got some other headwinds rents are falling, vacancy rates are rising, but as long as you're modeling your deal properly to account for those things, it's achievable to find rental deals that work. I mean, I think it's not necessarily a problem, but a factor that a lot of people don't really consider is these deals really only work because the government's insuring the mortgages and you're getting 50-year amortizations. And so nobody in their right mind would do a deal like that in the U.S. as an example. And when I talk to U.S. investors about this, they're like, why would I buy a 4 cap, 4% yield on cost deal just because I can spread out my mortgage payment over 50 years and that reduces my mortgage payment and makes me more profitable on a month-to-month basis, but I basically never pay the asset off, right? So there's caveats. That's a bit of a market distortion, and it's paid for by taxpayers. And we're very friendly with CMHC. They sponsor our events. We host kind of thought leaders in this space on the multiplex side. We just hosted Unpacking Multiplex's event in Vancouver. We're doing Edmonton, Toronto, and Montreal later this year. We talk to them a lot about this stuff, but there's a degree of it being a little bit like market distorting. But it is working. It's getting. I mean, it's been a very successful program. 88% of all apartment starts in Canada in 2025 were from CMHC MLI Select program, and rental housing starts as a percentage of total construction in Canada were the largest that they've ever been for several years in a row. So it's obviously achieving its goal. It's just the question is sort of like at what cost, right?
Yeah. I know you like to look at historical data and trends. In your perspective, back to the condo shortage, how long does this typically last? Like this pipeline gap, like how long does that last? And more specifically, what signals do you look for or watch for to know when it might be turning?
Yeah, it's a good question. I mean, like you really only have one historic comp, which is like the 1990s when you have when you had a housing correction of this magnitude where interest rates went up this much and house prices fell this much and immigration dropped this much and there was this much excess inventory. But in the 1990s, and it does seem to be playing out pretty similarly to that, there are obviously some new X factors that are kind of been introduced, one being like, adding a trade war and a literal war to the mix, oil price spike, although we've seen oil price spikes precede like 90s recession, 80s recession, 70s recession. So that's pretty much like a guarantee that you're going to end up probably with a recessionary situation as a result of an oil price spike. And we can talk about why that is if you want. But the 90s is like you saw this steep drop, 89 to 1990, and then you saw like a little bit of a bounce as like all the first-time home buyers who couldn't afford to buy houses the last year before kind of like rushed in and they're like, this is my last chance, and then it kind of rolls over again and grinds down for like, in the 90s it was like 5 years. And so if we look at that now, like we're in year 4, right? So and in the 1990s, I think it was like 89 was the peak, 96 was like the bottom in Toronto at least. It was like 95 nationally, and then the more important question is like when do we get back to the previous peak? And that was like 2002, so like 13 years peak to trough, and if you adjust that for inflation, it was like 2012, right? So I think that would be a reasonable outcome to expect to happen right now. Like cycles just take a long time, right? People only have to pay their mortgage once a month, and so people don't just like if they lose their job or inflation's really catching up with them or whatever, they don't go delinquent immediately. Like the idea that rate hiking cycle started and everybody's just going to stop paying their mortgages immediately, it just doesn't happen. We also only renew our mortgages every 5 years, so this year you just have like the biggest wave of people renewing their mortgages. And so you're actually just getting to the point where we're sort of at peak number of people who are impacted. The impact is smaller because rates have come back down a little bit, but I think you don't really get to the end of sort of like the pain being added to the market until we're through that, which is probably end of this year, early next year, and then that's when you might be worth thinking about sort of like a bottom. And I'll add this last piece and we can move on is like if you look at a bottom in the 1990s, like people want to think about it like the market's either going down or it's going up, but like markets can go sideways for a really long time. And in the 1990s you sort of had like this long flat period, like the bottom was like over a year long, if not longer, and so that's what I would think about. And that's like a really good healthy thing, right? Like you want that market where there's sort of a period where people can buy and sell and trade and there's no like volatility on their house going up or down in value and they get caught in transactions and stuff like that. So I think that would be a good outcome for us to hope for.
Yeah, makes sense. And, real estate and construction obviously are very closely intertwined. We speak to a lot of residential construction and trades companies, and they've been slow for a little while. You anticipate end of this year, early next year will be the bottom. Like what do you foresee in 2027 then?
Yeah, I mean, I think 26 will probably be like the worst that we're going to see from like a economic picture. Like I think, like unemployment's going to continue to rise throughout the year. You see more people kind of getting into those more expensive mortgages and going delinquent. So mortgage delinquencies typically will follow that. I think the outcome really depends on like whether or not we do see a oil price induced recession, which I think is a likely outcome, but I've honestly been wrong on my recession calls pretty consistently. So take that one with a grain of salt. If oil prices spike and everything gets more expensive and people can't afford stuff and they stop buying stuff, then yeah, you get a recession within like 1 or 2 quarters, and central banks have a lot more room to drop prices. So like a recession's super bearish. Well, it just speeds up the process, right? So it's super bearish in the short term, but it's more bullish in like next year, right? Or because then you have, then we're in an environment where rates are 1 or 2%, or like, so no, maybe not there, but like 2 or 3%, not 4 or 5%. And that, people take on debt. Canadians have proven that we love being irresponsible with credit, right? So if interest rates drop, we're going to lever up and do dumb stuff with it. So that will probably stimulate the economy.
When's the next rate announcement?
May, and then there is only one in the summer, I believe, and then there's then it'd be September. Yeah, I think May, June, and then
yeah. And what are they forecasting?
Hold. Bond yields sort of indicate that rates could go up, but that's not like realistic, right? Like bond market's almost always wrong. So like take that with a grain of salt. We always talk about it. It's like, oh yeah, like bond market says rates are going to go up. It's like, well, when has the bond market ever been right? But as it stands, the mechanics of it are like oil prices go up, the cost of everything that uses planes, trains, or automobiles to get to the consumer, which is pretty much everything except for like SaaS products, goes up, and so everything becomes inflationary. And then if you have inflation and your inflation's reading high, and like the US print just came in like quite a bit higher than expected, I think it was like in the 3s and it should have been in the 2s, or it jumped from 2 to 3, then you get demand destruction, unless you have it coupled with like what we saw during COVID, where the governments were giving away stimulus money and super cheap interest rates, and they said it was transitory. If consumers get faced with a massive inflation and they can't afford to buy stuff, they stop buying stuff, and then that's when you see an economic contraction, right? Demand destruction. And so, the rates kind of like are only looking at the first part, right? The inflation part. They're not looking at, well, because we don't know when that starts happening. We don't have any data to believe that that's going to be the case yet, even though history would tell us that that's going to be the outcome. So as it stands right now, it's probably like hold, again, bond yields tell us that rates are probably more likely to go up than down in the short term. But if you actually really think about this 6 to 12 months out, they're probably more likely to be if you were to say a year from now, are rates going to be lower or higher than where they are? My guess would be probably lower as a result of a recession, unless I'm missing something and we can withstand a recession because the government spends an insane amount of money.
But that's kind of like my cue that I was going to get into next, Daniel. Because I know you've touched on a lot of topics here, but this is one thing that I don't see. And again, correct me if I'm wrong. You're more of the expert on this than I am, but we talk about this a lot. It's like, where's the incentive, right, to business owners, to developers, to anybody to get this kickstart going, right? Like I know you said that they've lowered, the tax, right? But also they've implemented a tax that kind of started this shit. Right, initially, right? So it's like what I just heard, when the first oil spike came, I heard the government kind of introduced this an extra 16% carbon tax, but now they're talking about we're going to reduce the tax to help these people, to help Canadians, right? So it's kind of like you're the creator of your own demise, right? You're the one that's kind of like
for sure,
like causing this, and this is where me and Costa always talk about free market always speaks, right? That's where I kind of find that no intervention is kind of the best. Let it settle itself without coming in. I'll give you a prime example. Like one of my cousins, he's a real estate agent. He's actually a relocation agent for the MLSE as well. And so he got a player, which obviously I can't disclose, to come to one of the teams. Came to the team, wanted to go buy a house. They went out looking for houses, and because of this, I don't know, I believe it's like a 25% foreign tax or whatever it is, because he's not a Canadian citizen, even though he just got traded to this team. He was looking at a house that's 3.9 million, obviously in Canadian funds, right? So he looks at it coming from America. It's like, oh, okay, this is a good price. And it's like, oh, and by the way, there's this tax. And, it just drove up to the price to the point where he literally told him in the house, the guy was ready to put an offer. And he's like, honestly, just take me to rentals. I'm not paying this. This is ridiculous.
Yeah.
Right. So again, just getting back to like, do you find that, and again, I don't know if you want to disclose it or whatever, but I just find that sometimes like the government is a lot of times is initializing this stuff, and then they're not incentivizing, companies or entrepreneurs to keep people employed or to keep the markets going. And then it's guys like us that are all sitting there trying to figure out like, okay, when is this going to go up? When is this going to go down? When I don't know if you feel the same way. I just feel like free market kind of just, without intervention, just like kind of works out itself.
Yeah, I would agree that it probably would, but there are just so many distortions that are introduced as a result of policy that like unless you tear every single one down, you never actually have a free market, right? And like the idea that we have free market economics in anywhere in the world, really, to be honest with you, except for maybe like some traditional like tribal societies that like barter and just have no rules. Like we, and unfortunately, like we're just so layered with bureaucracy and tax and things that distort the market that you'll never like have a true understanding of whether or not these factors will could be disimpactful if added or removed, right? Or impactful if they like, because if you get rid of one, there's still another one. Like if they remove GST, HST, well, you still have development charges and like you mentioned, non-resident speculation tax or whatever, right? So
but that's where I'm kind of going with this, and sorry to interrupt, that's where I'm kind of going with this, just because we know some developers, and that's exactly what they're saying. They're like, look, man, I bought this land, right? Like obviously developers, they make money, but I bought this land, I've zoned this land, I've gone through the services, I've gone through this, I've gone through that, and it's like these fees that they're attacking me with now in order to get this project off the ground, which is going to employ, let's say, 10,000 workers, right, across all types of companies and bring revenue and, provide housing and this and that. They're like, it's just not worth it, right? So I've heard a lot of developers, which again, I just don't want to name any of them, but they're literally like, I've asked them straight up, I'm like, what are you guys doing with it? And he goes, I'm taking it and I'm putting it on the shelf. And that land can stay there, until it just makes sense. It doesn't make sense anymore.
Yeah. I think a lot of developers are doing that. A lot of developers don't have the staying power to do it, right? So that's the interesting part of the market. Like majority of land that's trading hands right now is receivership. So and that's like its own thing in itself, right? That's going to drive land values down as lenders start to offload these deals. But like you're absolutely right. If like there's no incentives for builders to build, then they're not going to do it. Now some guys can continue to hold on to the land or pivot to rental or whatever, but not all of them can. And so this is where you sort of end up with it being kind of like the painful end of the counter cycle where, you start to get to the consequences phase of this whole thing.
Sorry, did you say most transactions now are from receivership?
Land, yeah. Like if you're looking at like the residential land market, like it's mostly builders offloading sites that, or lenders offloading sites that builders can no longer afford to pay the mortgage on, sorry.
Is that typical, or has it just like increased, or has that always been the case?
No, that's never been the case, to be honest. It's usually like a very small fraction of total supply, but when you get to these cyclical peaks, like the 90s as well, you would have seen this, maybe 2008 a little bit, like, where there's people who are failing, projects who are failing, then that's where that ends up being most of your supply.
Yeah. So speaking on developers, right? Like they're, developers, it's all about math, right? They follow the money, do the numbers work? It's usually like yes or no. Do you see, are developers just taking their capital outside of Canada right now? I know there's been a lot of recent data that I've seen that shows not only developers, but entrepreneurs. And what does that mean for Canada over the next few years?
You are seeing,
do they come back?
You're seeing like quite a bit of capital exodus from Canada. Less so developers, I think, because like they work on like a static product that exists within Canada. But some who want to do this product in a different country are doing that. Do they come back? That's a good question. I mean, I think a lot of people who are, I guess it depends on whether or not the country gets to the direction that they were fleeing, like it goes in the opposite direction of what they were fleeing from, right? Or what their capital was fleeing from, which doesn't really seem like a likely outcome from my perspective, but I guess you never really know. So I think like people who are leaving Canada for whatever purposes, I think there's a lot of other businesses leaving that are less like developer focused, like obviously more geographically moving, or just like wealthy people who, can invest or buy businesses and make money in any jurisdiction. That seems to be more common. But do we get people back? Yeah, probably not, to be honest. Like I think we have if people can afford to and are consistently like moving to, the biggest recipient of this is the US, right? Like, yeah, we're gonna get people back from like maybe like Mexico or, Europe or whatever, probably higher likelihood. But from the US, I mean, like culturally very similar to Canada. Like it's not a huge lifestyle change. Language is similar. We share in a lot of things. It's easy to travel back home to see family or whatever. So I feel like we're probably a much lower likelihood to get U.S. customers back. Sorry, U.S. immigrants back.
Yeah, makes sense. Speaking of fleeing, I've spoken to maybe in the last couple of months, maybe 3 or 4 contractors from Toronto who are now either going to Alberta or doing projects in Alberta. I know you brought up Alberta earlier. So first of all, what is causing this action in Alberta? Is this durable or is it more of like a short-term bump?
I think that there's a variety of factors. So there's probably like the 3 easiest like ways to think about it is like number 1 would be like affordability. So during COVID, you were seeing a lot of people going there for housing affordability. So like just pure economics, right? Like my house price to income is better. My rent to income is better. I can make a higher comparable wage and live in a much cheaper city. And, there's like natural beauty and all of those things. So I think that's like kind of the next one is just like Calgary especially, like I would say is one of the most beautiful places in the world. Like we're right by the mountains and, you still have that urban life and whatever. And then the final one would be probably like political, right? So I think, Alberta would be very much like the most U.S. sort of right-leaning place that you'd be able to find in Canada. And I think a lot of people who are kind of fed up with leftist politics and even like Ontario politics and whatever, feel compelled to go to a place where they don't have to deal with that and kind of get maybe a political flavor that's more suitable to them. So those would probably be like the 3 big reasons why I think you're seeing a lot of people go to Alberta for sure.
Well, the Canadian government must be getting a bit nervous about people leaving because the Liberals just proposed an exit tax of $500,000. I don't know if you guys saw that at all.
Yeah, I don't know if it was like proposed, but it was like discussed. It was certainly like discussed out there by somebody, like a third party kind of guy who.
I was gonna say, like, is that like breaking news? Yeah, that was from that convention or whatever.
Yeah.
I don't know.
Yeah, I don't see that. These are just like those dumb things that end up being discussed that like people should not talk about because it's.
Yeah.
You know what my problem is though with that?
It wouldn't surprise me if they try to put it forward.
Yeah, that was gonna say,
that's my problem with all of this, Daniel. I agree with you, man. I've never been. We've said this so many times on our episodes. Like, I've never been one. Again, what's the 2 things you never talk about, right? Like at the dinner table, let's just say, right? It's religion and politics. But I just think we've gone to a point now where, like you said, it's like, I don't see it happening. But we've said that, let's just say in the past 6-7 years to so many things, and sure enough, these policies are pushing through, right? And it's just getting to a point where, I just don't want to remove anything from the table because what I've seen politically, and not just in Canada, right? Like we could say the same for France, England. We see things happening all over the place that you never thought would happen to, let's call it, democratic countries. And it's like there's no way they're going to pass something like that. And it does, and it ends up happening, right? Like even our censor bill here, right? That I never thought. I remember when that originally came up, I was like, "There's no way. How can they block the internet?" Like at that point, you're what's the difference between us and Cuba? I remember everybody was saying that, and it's like, well, here we are,
Yeah, you have to look at it too. Every citizen, is worth a certain amount of money through their lifespan, right? So I mean, if you're seeing Canadians flee or leave, whatever you want to call it, and they start leaving at these record numbers, it's going to hurt the bottom line of the government and the money that's coming in. So they're going to aim for
Yeah. I would assume that they're confident that they can replace that with immigration, right? Like it seems to be the go-to.
well.
So
They've
yeah.
been doing that quite well too for the past. few
Yeah,
years.
for sure.
And it's crazy too, because getting back to the tax, it's like, okay, you know, you have a bunch of foreign investors, people moving here that are waiting to get these citizenships. And it's like, you know, here's a tax, here's a tax, here's a tax, here's a tax. And then, you know, you got Canadians leaving and it's like, oh, we'll just replace them with like, you know, immigrants. And it's like, okay, or immigration, but it's like, okay, but like you've already taxed, like you've taxed people to a point where at what point do we stop and we look at it where, you know, again, just like the developers, right? It has to make sense. Like you got to give incentive, you know, and I always say this, like, you know, markets, yes, I know, you know, what was it, a couple weeks ago, I think they were talking like, oh, the market was roaring, right? But it's like, you know, we're still sitting here kind of saying like, okay, the market's roaring, but, you know, the economy's not doing well, right? So at what point are we going to look at it from a whole and just say, okay, man, like, how do we kickstart this, but kickstart it in a way where you're incentivizing these businesses, right? You're incentivizing, you know, Valerie to you know, operate in this province, right? Like, we know you're going to employ X amount of people and bring this amount in sales, which in turn turns into this amount of tax and, you know, payroll tax and everything like that. So this is where I kind of get to where I think as a whole, us Canadians, you know, we got to look at it where, you know, we don't need more red tape. We need more incentives, right? For everybody to be incentivized to go out and do something, make a product, produce something, right? In order to get this thing kind of like off the ground. Because like you said, 2025, I remember we were talking, and because we are in construction and we see these things at the forefront before they happen, like, you know, the bids that come in, looking at these larger tenders, looking at what's being developed, what's been approved, and you just saw such a slowdown to a point where, you know, we started seeing this like end of 24, and then, you know, into 25, and I remember even certain people we had on the podcast too, it's like, man, this is just the beginning of it, right? So like you said, I feel like we're just at the bottom of this kind of like pendulum, and it's kind of like in a plateau before it starts coming up. I think just everybody's kind of like hot and horny to say, when does this come up and how does it come up?
Yeah, so I would say that, like, I mean, it's already started, right? Like, they've already started spending a ton of money, and like, and it kind of circles back to like your conversation about tax. Like, I never really had an issue with paying taxes in my life until like I started really like being bothered by the way that it was spent, right? Like, and it's not to say that I really have an issue today. Like, I know that I have a burden of paying taxes for the CRA folks listening, and that I'll continue doing that. But you know, that I think it's like, you go to like Scandinavia as an example, like, you know, some of the happiest countries on earth, and they pay insane amounts of tax. But it's spent well. They have sovereign wealth funds. You know, the countries are wealthy. Their GDP per capita is growing. People are happy. They feel secure in you know, both physical safety and economically secure. And those are like the things that, you know, tax dollars should ensure. If you're paying all of this money, the government should make sure your economy is stable. In Canada, like, Canadians, I mean, at least based on the World Happiness Index, Canadians are feeling the opposite. You know, a declining happiness for the last 15 years, and GDP per capita is shrinking. So economically, we're also experiencing, you know, a decrease in quality of life or standard of living. Our houses are getting smaller. The portion of income that we spend on housing is growing. So the social contract that you sort of have with the government is eroding a little bit. And I think that this is where people start to actually have, and rightly so, become concerned about spending of the government and the amount of money they're paying in taxes. And the conversations really get more into the limelight. You don't hear people complain about how much tax they pay, or not as much. And it doesn't become a you know, very large public discourse in when the economy's ripping and everyone's feeling super rich. You hear it when things are bad and people are looking at all of their bills and feeling like they have no idea how they're going to pay them. And one of those bills, and probably the biggest one, is you know, how I have to pay the government as well. So I think that you know, do we have a new government that is going to try and spend more money more appropriately and do it better than the previous liberal government? I mean, probably. Like, if we give them benefit of the doubt, but that's a pretty low bar, I would argue, right? Like, it's not that hard to be that much better than the previous liberal administration. So should we be optimistic about it? I think it's like, I think we owe it to ourselves, not like to the government or anything, but to like feel hope that our country can progress in the right direction. If you don't, then you probably should have already left, right? And for people who like can't afford to do it, and like, tough guy, want to like leave the country, it's like, well, just be richer and do it. Like, that's how I would argue against that, right? Do I think that like the spending that's been proposed in the budget and the way the government's sort of looking at things is like appropriate way to spend the money, and that am I confident that they'll be able to deliver the results that I just discussed that most people should hope for? I mean, like, probably not. I think like the track record of the red team is not exceptionally good. They've lost trust of the public. They basically just had to run like a completely opposite candidate of like their brand for the last 15 years in order to win, and run on the policy of the Conservative Party to win. But they won, and so they're proposing $70 billion deficit, and so they're going to spend a lot of money, and they're going to put money into infrastructure, and they're going to put money into tax reductions like GST, HST, and all of these other layers of things that they're going to try and do to stimulate the economy, because we can't organically stimulate the economy. You need that fiscal steroids, right? You need the government to inject capital to do it, which is a not an inorganic way to grow an economy. And that's what should concern us more, maybe, as Canadians, is that like we haven't built an economy that's diverse enough that we can grow or can survive on just our own economic activity. It requires us to pay taxes, and then the government to spend those taxes to grow our economy. Not outside of just this economy. Like, you go to like the last 10, 15 years, like a lot of GDP growth and a lot of job growth has been coming from government hiring and government spending. And we need to be like willing to actually progress away from that. And everybody says like, oh, we are, but then, we indirectly work for the government on a job contract or in a union contract or whatever it is. And so like, I think when you really think about like the social contract element of it, and I'll leave it with this, is like everybody, I think the problem, and where you kind of get broken with like the idea of like a welfare state or like a more socialistic state, which like it's hard to argue that we're not progressing in that direction in Canada, right? Is that everybody they hate paying into it, but they still like are like, oh, I'm going to get mine, like I'm going to get I have to get my EI or my, my pension, public pension or whatever it is, like, because they're angry that they contributed to it, or like I paid into it, and so I have to get it. And like, until you break that, and make it where people feel like they're all collaborating in the system, which will just never happen, frankly, like, because we're selfish by nature. It's a very, very hard thing for any government to do, regardless of the color of the signs they put on your lawn.
Yeah, I totally agree. Kind of touching on that is the whole like tariffs, right? This is something that it's here. I feel like it hasn't been spoken about as much recently, just due to everything else going on. But a couple of questions here. Like, how do you see tariffs kind of flowing through the construction development like stack? And I know CUSMA, they're renegotiating this year. How does that play into your thesis on where things go from here?
I think I mean, like it's June, I think, when we're supposed to get like some finality. It seems like they've sort of just been ignoring it. Like, Trump's focused on other wars, real wars, like, not trade wars, which is good, I think. I mean, I think it's obviously catastrophic in other ways, but it's good for trade. I think you maybe like it's reasonable to expect that there could like nothing could happen, and he might just like be done sort of punishing Canada, especially like heading into the midterms. It obviously wasn't like going exceptionally well for him. I don't know if he really wants a lot more limelight on like kind of those sillier things that his policy environment was focused on. So I'm sort of optimistic that maybe it's not as catastrophic as I had once felt. But I mean, look, like it's the biggest, it is the biggest factor in the economy for the 12 months after that June, right? Or 24 or like 10 years. However long the contract is, if we get a horrible deal, then it could be very bad for us. If we get a great deal, it could be very good for us. If things kind of continue as status quo, well, it's already been priced in, and we can sort of just go on with our lives as if they were fine before. I think that people should probably position themselves for the worst case scenario, because typically the best case scenario doesn't need a plan at all, right? So what would happen to your business or your jobs or your customers or whatever if it was the worst outcome? And are you able to withstand that? Are you positioned well to withstand that? And if not, then okay, we'll make sure that you are. And then if it doesn't happen, at least you were prepared in the event that it did. So that's what I'd say. But like, yeah, if it goes poorly, like we're in big trouble.
Yeah, that's what I was going to say. You kind of took the words out of my mouth. Is like planning for the worst case scenario, and just given the state of where things are right now in the economy, and you throw in that potential worst case scenario of, negotiations going bad, tariffs being locked in or increasing. I mean, man, it's like.
But this goes everything we've talked about, kind of just to summarize in my head, and I might be totally wrong. Daniel, I'm not you. Obviously, you're much more versed in these areas, but it just comes back to, stimulating the economy, getting growth back on the table, bringing up our GDP, this trade war, a kind of a real estate kind of, I don't want to call it a collapse, but let's say on the brink of it, especially if it starts to go worse. It just comes back to, and I think you kind of said it underlining, like, on one of your kind of speeches there, is just how do we get back to self-sustain, right? Like we have everything here, right? We have everything here to kick it off the ground. Obviously, that's where, getting back to government spending their money in the proper areas. If we start to kind of rely on our own resources a lot more, I feel like, again, I don't know if it's a shortcut. I don't know if I'm missing a lot of layers to this, but I saw a statistic the other day where it's like, we have, gold reserves, oil reserves, lumber, and the list goes on. And it's like where we are in the world, and we're like top 3 on a lot of those charts, and we're like sitting at like 20 something in the world, and it's like, what the hell is going on, right? Like it gets to a point, like you said, like I don't care what color the sign is on the lawn. It's like everybody's been doing a piss poor job, because why does it take this for a lot of us who are not, let's just say, professional economists to see this, from a mile away, right? Like anybody in their right mind, like you said, in the last 10 years, if you are running, if you had somebody like that running Valerie, they'd be fired after month 3. You know what I mean? Yeah. Like, let's be honest, right?
It's true. It's not like we can't refine our own oil either, right? So why is that?
Yeah. I mean, like, I think that the easiest way to think about this is like the part that you mentioned, like, am I missing something? Not necessarily. I think that the part that a lot of people don't really I think about is sort of like just like the human nature of like the like people in power. We naturally progress towards like authoritarianism, right? And even both parties would be like probably more authoritarian, conservative. Well, they're both liberal, like realistically, like both the CPC and the Liberal Party are economically and socially liberal parties. But they would progress more towards authoritarian than libertarian. And I think if you really want a free market or free people, like you have to progress away from authoritarianism. But policymakers sort of, and who knows, like you guys might feel the same way. Like you go talk to your average person and you're like, should we have like maybe authoritarianism? Like, cause there's some dumb people out there. They're incredibly smart people, but like there are a lot of dumb people too. Right. So, I think there's a quote, something like, the biggest argument against democracy is like a 10-minute conversation with your average voter. And, I think the idea that like power corrupts, right? Like, people can come into politics with the best of intentions, and some of them, don't like, they want to do things that maybe we don't agree with. But the reality is that you consume or you assume more control as you are in position, right? You want to execute more things and just do the job, right? And you probably do this in your own business, right? Like, how many times do you want to delegate a task to somebody and you're like, nah, screw it, like, I'm just gonna do it myself, right? And so apply that logic to any politician, right? Trump, Carney, whatever, and are they saying, well, I'm probably the more capable person to make this decision, so I'm just gonna do it, or I'm probably the more capable person to execute this thing, and maybe so when you cast that out over Canada's economy, and we've had 15 years of liberal government, or whatever it is, 12 13 years, and they're going more less towards hard resources, less towards economic diversification, more towards policies that they wanted and supported. They don't if you give, I think politicians are naturally if they give consumers, or if they give citizens too much power, it's a huge threat to them, right? That can lead to revolution, and it has historically, but it can also just lead to them getting voted out. And so this is where you get this thing called the political business cycle. Like, they'll spend a bunch of money heading into an election to try and win the election, and you get these big waves through the economy as things like that progress. And you can't escape that. It happens regardless of the right or left, or authoritarian, libertarian, whatever. And I think that's what leads to it, right? Is you're not going to get a diverse economy if you have a government that doesn't want to diversify the economy. If they want to keep piling it into housing, which everyone on this call benefits from directly or indirectly, and the banking system and all of those things, right? We're going to turn our economy into a housing Ponzi scheme and get, grow our population massively through temporary foreign workers and immigration and whatever. And then we're going to not build enough houses, so house prices go up, so that inflates the assets of all of the baby boomers, and they're all happy, and we don't have to pay them as strong of pensions. And then you have all of these new people paying into the pension system and whatever, right? It's a mess, but they know it's the devil that they know, and they don't. It's so scary to think about, oh, we're gonna do a pipeline, and how many people do we have to argue with to do that? And now we have all of these new groups with different rights that we've introduced since the last time we built a pipeline, and you have to do indigenous treaties and all of these other different considerations that you have to get a pipeline from one location to the other, and so naturally, I think that they're going to bias towards, well, let's just do nothing, right? When they're not going to get their pitchforks out.
Path of least resistance.
So, and so this is why you're not natural. Well, look at, and then this is it's funny, it's ironic, right? Because around the discussion of authoritarianism, you go look at the progress that's been made in China, where they don't have to ask people for permission. They just do stuff, right? But I would argue that in a democratic country, you as a leader really actually only need to satisfy 30% of the population, maybe 50, right? If everyone votes, right? You just have 51%, and Trump won with 30% of the population voted for him, right? Because a lot of people just don't show up to vote, and then you got barely got the popular vote or didn't or whatever. Carney, same thing, right? Interestingly, in Canada, you in the most recent election, you had two basically identical platforms, and 80% of voters voted for either liberal or conservative. So this is actually historically one of the times where we're most aligned, and they make us feel like we're divided, but we're actually most aligned on a policy perspective. But in China, Xi Jinping has to satisfy it pretty much everybody, right? Because it really doesn't take that much of people to align. If they look at what happened before the war in Iran, right, to try and stage a revolution. So authoritarian leaders actually have a greater duty of care to satisfy their people so they don't rise up. That where in democracy you just have to satisfy a small group of the people so you can win the next election, right? So I think that's funny too.
Yeah, it is. And it's always short-lived cycles, right? It's always short-lived cycles, right? So in 4 years, how much can you really get done, right?
I mean, arguably nothing if we're talking about really meaningful things, right? They talk about the high-speed rail, or the Ontario line, or major infrastructure projects, especially at the pace that we do them in Canada, we're a bureaucratic nightmare, right? So you look at the Eglinton crosstown, it's the easiest thing, right? What was that?
Crazy.
3x the timeline and 5x the budget or something. So yeah, I would say you barely have enough time to plan these things in a 4-year period at the rate these guys go. And that's another problem in itself, right?
Daniel, I like what you said about the pipeline. And Johnny, you jumped in and you said it's the path of least resistance. And to me, those are not the characteristics of a strong country. When you're lackadaisical and you just really don't want to jump into anything.
Yeah, you're afraid of conflict, right?
You're afraid of conflict, or like you just mentioned, the Eglinton line, you have such poor city planning, or maybe you just didn't anticipate the amount of people that, blew up in Toronto and how big it got and how fast it happened. So now you're trying to build underground tunnels in a fully functioning city. So it's very challenging. You're spending a lot more money than you would. But with that being said, back to what I first said, like the characteristics of not being a strong country, a person in your position who's very in tune with the real estate market and obviously like financials, what do you think the average Canadian can do? Do we just rely on the voting? And again, not to get too political, but I'm just curious of what your answer is. Is that all we have to just kind of fall back on? And if you don't like it, get rich and leave the country, essentially?
Yeah, I mean, I think that, both, economically and, biologically, there's evidence that, by behaving selfishly, we actually advance our species far more than we would by trying to do it, for purely unselfish means. And so I think that, there are arguments to say, that, the greatest thing that you can do is live your life the best that you possibly can, right? Make as much money as you can, support as many people as you can, build a product or a service that really helps people and want to deliver it to as many customers as you possibly can at a fair price. And that's a meaningful way to exist and live your life.
Like Jobtable.
Yeah. What you guys are doing. But I think what I would actually really think, and this is something I talk about a lot, that I wish that, people would realize that we're not enemies, right? We're painted, I went out for dinner yesterday with somebody that we do business with that has very different political views than I do, very different, right? And we had an amazing conversation and we're excellent friends, if not better friends after the conversation, right? And we talked through a lot of these perspectives and realized that we're actually very aligned on a lot of things. And the problem with democracy is that politicians want to bifurcate us into these little groups so that they can rally that group to pull on those different groups in elections, the steel workers, the Teamsters, whatever it is, right? They want to find you in groups so they can kind of they don't have to go to one-on-one to different people to try and get a big group of votes to win the election. But the reality is that we are and the most recent election would prove this. We're actually as citizens of this country, we're more aligned than we've ever been. Right? Ever. There's never been an election in history where two parties ran almost identical policies, and sure, the Liberal Party stole a bunch of stuff from Pierre's platform, but if Pierre's platform was good and they won, isn't that a good thing, right? Shouldn't we be celebrating that maybe, right? But their platforms were very similar, characteristically, obviously quite a bit different from cabinet makeup, etc. But platforms were very similar. So we as Canadians, both groups of us voted for a very similar outcome and set of policies that we wanted. And yet we're being told by politicians that we hate each other, right? That, liberals and conservative voters, or liberal voters and conservative voters can't be friends, and that we should be lighting each other up in Instagram comment threads and hating one another. And historically, you would unify a country by having a common enemy, right? In the World War I, World War II, there was, look at points where everybody was on the same page in Canada or the US. And now we're being told we're so far apart, and we have very different values and all of these things. But I would say arguably, save for a couple of hot button issues, which don't really end up ever getting formed in real policy, the pro-life, identity politics, stuff like that. Save for a few issues where I'd say most people socially are far apart, we're at least economically very, very close to one another. And I think that if people stop letting politicians divide them and stop letting them turn us against one another, then we're actually a much more cohesive group, and we have a lot more ability to demand things of our politicians and hold them accountable because we are unified. And I think that we should really focus more on where we're similar and how we can come together and work together than like why we're so different and hating each other, to be honest with you. Because if we're putting all of our energy into arguing with one another and sorting each other into different groups of shit that we agree and disagree on, then they're winning, right? Like they're winning. We were making their job so easy. It's like, well, we just gotta, like
I was gonna say, they say divide and conquer.
Yeah,
I really like what you said, because it's almost, it is that, but it's almost like the illusion of division. We're not divided.
For sure.
It's the illusion of division, and it's pushed by the media. It's powered by the media, just cramming it down our throats that we hate each other. That's a great point that you made. And at the end of the day, maybe that's the solution, that we just need to sit down and talk to each other.
Well,
Rather than,
that is, man.
people tell us how we feel about each other.
I've thought about this like all the time. It's like, how cool would it be to have like a podcast where like two people with very opposing views just sit and just like they can talk a little bit about that, but maybe even just make it like they talk about anything but that issue and eventually arrive at it. Like they have no idea who the other person that they're talking to is, and then they like become like, it's like your goal is to like become friends with this person, and then at the end it's like, okay, hey, we're gonna drop this bomb on you, right?
That's it.
But
it's clearly by design too, right? It's like, as we all know, free speech is the cornerstone of democracy.
Yeah.
Right.
Yeah.
Talk about authoritarianism. When you silence people and divide people, it's clearly by design for those other reasons. But very well said.
Very well said. And I just want to leave on one last note on that. Just let me know when you're running, Daniel, and you got my vote, okay, buddy?
Yeah. Well, maybe when my kids are old enough, that won't ruin their life.
You were thinking about it, no? Entering the political arena at one point? Yeah. No?
Yeah, I'll probably do it one day. I don't know. I think there's too many naked pictures of me on the internet to do that, but
don't worry, man. You got my vote, man. You got my vote.
You can do anything and win an election now. So maybe one day. I don't know. It's not up to me. I think it's like more up to the people, right? If I can add value, I'd happily do it.
So there's breaking news on the Deconstruction podcast. Do we need to start
10 years from now? Yeah. 10 years.
Last quick topic here. AI, right? You're building the first AI real estate brokerage in Canada. You talk about AI a lot with agents, OpenClaw, all this stuff you're doing. Talk about that. What are you doing specifically with AI? How is that impacting your business? And how should other companies, like any business, but specifically for like a trade company who's generally a very late adapter to technology, how should they be thinking about AI moving forward?
So I would say, anything that can be done on a computer can be done by AI now. So, you start to think about it, and especially for trades, right? Like a lot of, if you're doing your job right, like if you're a entrepreneur or like self-employed, if you're a real estate professional, if you're a 1 or 2 man show in like the plumbing or electrical space or whatever, like your real money and you're most valuable outside of the office, right? And so, and when you think about things like invoicing or managing workflows or, like billing clients or writing quotes or whatever, like all of these things now are becoming, they still need you to be the decision maker, the critical thinking, the person steering the employee, let's call it, of AI. But a lot of these things like that can be automated away. And I would encourage people to really just like pick, like I was like really exhausted by the real estate business and just like started to hate it because I just like my fellow agents were difficult to work with and the market was horrible and like to the upside and to the downside. And I found that like I have this like renewed sense of energy now as we're like automating things, because it's like I go to do a piece of the job. And if I'm like really rolling my eyes and hating it and being like, I just don't want to do this task, I get excited to see whether or not I can automate it, And I think that like people should really try and do that. Like, I mean, especially like with like Claude, right? Like Claude Code. If you have that on like your Mac, it can like take over your Mac and like do annoying stuff for you, like pretty easily, to be honest with you, for like $200 a month, right? So I think most people like just need to know that. Like a lot of people like in the trades like don't know. Although trades are actually like impressively with their adoption. Like I think it's interesting because this is something that will actually give small businesses who have the ability to be agile huge advantage, because they can just get on the computer and mess around and figure it out. Whereas like at a corporation, you're not even allowed to put this stuff on your computer. And so the massive institutions have no agility and are actually more likely to end up like way behind and negatively impacted. Whereas like small entrepreneurs who know the workflow and know everything that's done in their business because there's like 2 or 0 or 5 employees or whatever, they have to start picking away at these things. And so it's like, if you have an admin, like buy them the highest Claude subscription and just tell them to start doing stuff. Make an SOP of everything that you do every single day, record it in Loom, get it itemized, task by task, teach Claude how to do it, give it all the necessary logins. If you really want to take the next step and have like remote access to that, get channels for Claude, or build yourself like an open Claude. But I think a lot of the labs, OpenAI, Claude, et cetera, are really progressing in the direction of building those things. Manus is another big one. Obviously, Facebook, Meta acquired them. These things can do stuff. Like AI has hands now. Like go and put it to use, because and the sooner that you start, the better that it learns you and the better that you learn it. And so like your knowledge and your experience of it actually compounds. So I would really say to people, like, these tools are incredibly powerful. The sooner that you use them, the more benefit that you're going to, it's like an investment, right? And it's going to have like knowledge compounds, capital compounds, right? I think that artificial intelligence is going to be the same way.
Yeah, actually, we talk about that all the time. I actually, even to further what you were saying there too, Daniel, I feel like if you don't jump on it, you're going to be left behind. That's the reality of it too, right? I feel like there's going to be way too much catch up to do in the next 12, 24 months if you're not even at least introduced to it, right?
For sure. Well, you're going to look at, like, you're going to, like in the real estate space, like we have, an agent who's using these things can charge less or can get to the customer faster or whatever. They're way more competitive. And this is going to be the same thing in your business. Like, why could my competitor do all, like, go get all of these jobs quoted? He beat me to the customers. Before I could even get my quote turned around, he had already quoted and got the person signed up on a contract, whatever. Oh, because he's leveraging these tools. And so the people who aren't using them are just going to get blown away by the competition who are using them. And then by then they'll hopefully not be too far behind that they can catch up. But that's where I think that it's profound. Like, there's never been a bigger opportunity to get ahead of your competitors and to win in business than than with the introduction of these tools.
100%. I actually wrote a small article last week exactly about this, because just like you were describing, like I just get obsessed with like just trying to automate things that I don't like doing or I'm annoyed with, and I haven't felt that type of excitement in any technology like probably since like Bitcoin. You know what I mean?
Yeah, honestly, man, no, I'm similar. Like, I think I built like the last technology I built that I sold to the Toronto real estate board. Like, I literally just stopped doing that. Like, I just was like a realtor for the last 10 years. So like,
but it's this window that we're in for a lot of these small companies. Like you were saying, there's a very unique window right now. You just have to like really don't sleep on AI. You got to use it. You got to play around with it, because this window is not going to last forever. And this is a really unique opportunity for these small teams to either catch up or surpass to a lot of big players, which can implement these things quickly enough, but they eventually will. But so I think that we're in a very unique spot right now.
Yeah, totally agree.
Yeah. What else, boys? Anything else we need to touch on, or?
No, just second you start your campaign, send me the hat, the sign. You got my vote there, Daniel.
Yeah,
sounds good.
Daniel, really appreciate it, man. This was a real pleasure. We appreciate you having you on. Best of luck with everything. You're killing it. Keep going. You're providing a ton of value out there. So really well done. And appreciate everyone listening. If you got this far, you are a trades or a construction business looking to streamline your operations, make your life a lot more efficient, check out Jobtable.com. Start streamlining your workflow. Sign up for a 14-day free trial and check it out. Until next time, really appreciate it. We'll talk soon.
Thanks, Daniel.
Thanks, guys.